Hello everyone, I'm Divine Duran of Lpcd Property Consultants. Firstly, we wish to thank Biz News for the opportunity to have David Lpcd on the show. With the COVID-19 disrupting the markets, a lot of questions have arisen as to what is next. We've gone through a lockdown since March 16 to then a modified ECQ, and now we're in GCQ. This session will address the challenges and problems, prospects and upsides of the COVID situation in the Philippines and its ramification on the real estate industry. And here with us is David Lpcd, who has 25 years of experience in real estate and is considered the leading commercial real estate broker in the Philippines. He has arranged the lease of more than 1 million square meters of office space and sold more than USD 2 billion in real estate. Let's welcome the co-founder and CEO of Lpcd Property Consultants, Mr. David Lpcd. Hi, David.
Hello, and good afternoon, everyone. Thank you for having me in this show. Thank you, Biz News Asia.
Thank you, David, for being with us today. We're all excited to hear your insights on this very interesting topic. So without further ado, the floor is yours.
Thank you very much. I've been asked to give you our thoughts about what's happening in the property market from our perspective. And I'd like to start off by saying that despite all the negativity, there's been so much good news also that's been happening in the Philippines throughout this COVID crisis. So the first thing I would like to say is that there's been a lot of infrastructure projects that were put on hold because of the lockdown, but now all of those projects are back in under construction, and these 9 to 11 infrastructure projects will be completed in the next 12 to 18 months, and that will be meaningful for the Philippines because these infrastructure projects total 145 kilometers of roads, rails, and bridges. It will benefit the geography between Clark all the way to Cavite, Laguna, and there's a couple of projects in Cebu, and it will benefit between 30 to 35 million people. And this geography and this number of people represent more or less close to 60% of the GDP of the country. And the immediate impact of all these infrastructure projects, in our view, is that you will see traffic cut by half. So the typical worker in the Philippines who spends 6 hours a day traveling from home to work and back, that time will be cut by half. So instead of spending 6 hours a day, the typical office worker will only spend 3 hours a day traveling, which will be significant for economic development because those 3 hours, instead of being lost in the car, will be deployed elsewhere to more productive use. And so people will have more time for their loved ones, more time for training, more time for education, more time for work, more time for so many other things other than being stuck in the car or the bus or the jeep. The other good news that we would like to share is that the BPO industry continues to be growing in the Philippines, and the BPO sector has become such a relevant part of the Philippine economy to the point where they occupy 1.3 million direct employees and occupy 7 to 8 million square meters of office space throughout the country. They are the single largest employer of the Philippine economy, and the geography is predominantly English-speaking, language-based work coming from the US, UK, Australia, and many other parts of the world. And we anticipate the BPO industry to continue to grow, especially in August of this year, all the way through to the end of the year, because the Philippines plays a very important role in cutting the costs structures of many multinational companies and increase productivity. And so we think that when all this is done, and by this time, it is now June, late June, many companies, many CEOs are now adjusting to the new normal. So the demand has shrunk to a certain size, and the global supply chain servicing all that is also going to shrink. From whatever is left, a significant chunk of that will be offshored to the Philippines and to India. And so we are going to be a big beneficiary of that effort. And what many people cannot appreciate is that the Philippines is probably the only office sector in the world that has not contracted. And in fact, during the lockdown, we were probably also the only market in the world that still grew in take-up. And so we recorded something like 57,000 square meters of take-up, new take-up in the months of April and May. Deals that could have been canceled in the lockdown but were not. And that shows you the resiliency and the clear intent of many companies to continue to expand in the Philippines. And the irony about this lockdown is that during the months of the lockdown, we have received as much as 60,000 square meters of new demand from companies that want to take space temporarily for a period of 12 to 18 months for the sole purpose of getting them back to the workplace out of the home. Because work from home for 70% of the working population does not work. It's not viable for 70% of the population to work from home because of so many distractions back at home. And the security, the data privacy issues, the secrecy, and the confidentiality of the information they handle all make it very difficult for employees to work from home on a long-term basis. And so many companies have realized that and are starting to migrate them out of the home back into temporary office. Why do they need more space? Because many companies, all companies cannot occupy every seat now. In fact, the maximum capacity of every office space would be about 50% maximum. And so many companies are temporarily taking on more space for the interim until we go back to pre-COVID levels. We expect the POGO sector to continue to grow in the Philippines as well. Now, today, the POGO sector and the BIR are at loggerheads. They are arguing right now about the amount of taxes that the POGO sector need to pay, back taxes and current taxes, before they're allowed to operate. And I'm happy to say that of the many POGO operators, a number of them have actually started operations, which means that they have struck a compromise with the government in settling their obligations. And so I think that as the travel bans get lifted towards the year end, you will see a lot more growth coming from the POGO sector. We're also very excited about the global fiscal stimulus because every economy in the world trying to avoid a recession are printing money and pump priming their economy with the so-called fiscal stimulus. And the biggest demonstration of that is the fact that the government of the Philippines recently borrowed 10-year money and 20-year money in the tune of a couple of billions of dollars. And they have done that at under 2.5%. The cost of money for the Philippines today has become so cheap, partly because of the fiscal management that the Department of Finance has done, and partly because of the fiscal stimulus that has resulted in the deflation of interest rates throughout the world. And that is benefiting the Philippines tremendously because it has put the Philippines in a very good position to be able to borrow at a time when we need it. And the interest rates today are lower than the interest rates pre-COVID. So in a way, the Philippines is in a very good position, which leads me to the REIT, because what many people do not understand, especially those outside the Philippines, is that the Philippine REIT market could be very sustainable long term because of the amount of assets available here, quality assets with quality tenants across a large geography throughout the Philippines. And the REIT market will become an avenue to capture all this free money floating around the world because of the fiscal stimulus. And this fiscal stimulus that is swooshing around the world is going to find its way in the REIT sector, and we will have many companies doing many REITs across many asset classes. Next. I'm happy to say that our forecast for the Philippine office market continued to remain at 800,000 to 1 million square meters. And while that is a 50% drop from the numbers we did in 2019, we think that the Philippines will avoid a glut in office space, because as the demand drops, the supply is also dropping. The one thing unique about this virus is that it has impacted not just the demand, but it's also produced a contraction in supply. Because of all the construction delays, we think that supply will also drop by about 50%. So instead of expecting 1.5 million square meters of office space this year, we'll probably see somewhere around 800,000 square meters of office space completed this year. And so if demand is somewhere at 800, supply is somewhere at 800, we will have equilibrium and avoid a glut. And a glut, as you know, will produce a drop in rental prices, which I think will be avoided this year. Let's review how the Philippines did in 2018 and 2019 before we dive into 2020. So to put things in perspective, the Philippine market consumed 1.6 million square meters of office space in 2018 and 1.75 million square meters of space in 2019. And for 2019, Metro Manila was about 1.4 million square meters net take-up. And that makes the Philippines the fourth largest market in the world after Shanghai, Beijing, and Tokyo. And many countries envy the Philippines for the size and the scale of the office market here, because the take-up in office space is a direct barometer to the amount of jobs generated locally. The more office space is taken up, it means the more companies are opening jobs and employing people directly in the Philippines. There are two major drivers of this office market. The first one is the BPO sector, which has given the Philippines a boom in real estate office sector for the last 18 years. And then you've got the POGO sector, which has put this already very good office market on steroids. The POGO sector has put the market on steroids, and the POGO sector went from 200,000 square meters of space in 2016. Today, they occupy 1.7 million square meters of office space. But they don't just occupy office space, they also occupy a meaningful amount of residential space. How much residential space? About 2 million square meters. Next. I am very relieved to show you that despite the lockdown, the first 5 months of take-up in the Philippines has been about 211,000 square meters of office space taken down. 57,000 square meters of that 211,000 was taken up in April and in May during the height of the lockdown. Now, while that 211 is a smaller number compared to 2019 first 6 months, in fact, if you compare the two, that's a 75-76% drop. what is also, what I would like to remember better is that we saw a 34% increase in take-up during the lockdown. And that's probably the more important number, that despite the lockdown, people still took space. Next. And if you look at where the space went, who took the space, only 60% of the demand was in Metro Manila. And for the first time ever, the provincial sites comprised 40% of the total space taken up, which is a very good thing, because now you see more and more companies going to the provinces outside of Metro Manila. And Cebu, Iloilo, Clark, Davao are the 4 top recipients of demand from the BPO sector. Next. And so we have been in a very long boom, one of the longest booms ever experienced by any country in the world in history. And the biggest reason for that is the BPO sector. Had you put money in office space back 12 years ago in 2008, 2007, Bonifacio office space was only selling for 100,000 pesos a square meter, which is what you see here in the screen, which is the blue baseline. The orange shows you the growth in capital appreciation over time. The green shows you the movement of rent, and the gray line shows you the percentage yield based on your acquisition cost. And as you will see in this table, that you'd have made a lot of money just sitting on office real estate in Bonifacio. And it's not just Bonifacio, it's all over the country. Next. And I have here 2 lines. The blue line shows you the original pre-COVID schedule of supply of office space entering the market from today to 2025. And red shows you the new post-COVID supply numbers. You will see that that's a 45% drop, 45% drop in the supply. And while it will catch up in 2021, and you're going to see this bump of supply, we also anticipate a big jump in demand for office space next year as the BPO sector continues to grow in this market. And so I think we will avoid a glut in 2020, and we will most likely, very likely, avoid a glut in 2021. And what I tell many clients today is that if you look at this supply, the supply is historically very, very low beginning 2023 to 2025, which means that today is the best time to start a building. As difficult as that is to appreciate, the supply of office space in 2023 all the way to 2025 is too low. It is unhealthily low. And so this low supply situation will mitigate all other risk that anybody thinks they will incur by building today. The fact that you have very little supply in these years will mitigate a lot of risk in development. And so we are encouraging many of our clients to take the contrarian view.
Now to continue our discussion, turning the floor back to David to share his 2020 forecast. Hi again, David.
Hello. So we've had a very good run for this year, despite the fact that the COVID has made such economic havoc for Philippine economy. And despite all of that, we still see 600,000 square meters of transactions that want to get done by this year. So these are transactions that could have been terminated during the COVID, but they have not. I think that's one of the important takeaways about this session, is that the COVID has not really stopped all this demand from wanting to happen and get transacted. And so we're quite looking forward to getting all these deals done. So a third of the demand comes from the BPO sector and another third from the POGO sector. And many other companies are looking outside these two sectors are also looking to get transacted into new space. Next. This shows you the behavior of demand in 1 year, comparing 2019 demand numbers versus 2020 demand numbers, and how they behave per quarter. And you can see that there's been a spike in blue for the 2019 demand numbers. And then you saw this very low base in red, the 2020 numbers. And we discounted the second quarter to be zero for the office leasing market. And I'm happy to say that despite that mindset, I'm very happy to say that 57,000 square meters of space got closed in the second quarter, which is big. And the second quarter is not even over. And so we're going to have this slow burn in second quarter, and it's going to kick up in August of this year, all through to the year end, until we hit somewhere close to 800,000 square meters. Next. My sense of optimism about the office market is founded on the last two crises we've had in the Philippines. And this slide shows you history up to as far back as 2005, 2006. The blue line on the screen shows you demand, actual demand per year for the last 16 years. And red shows you the actual vacancies in square meters in each of these years, all the way to today. And the dashed line shows you the demand and supply had the POGO sector not enter the market. And so I'd like to bring your attention to 2007. In 2007, 206,000 square meters of space got transacted, which at that time was a historical high. Now, you have to realize that never in our wildest dreams at that time, 2007, that we would see the market continue to grow at the scale and pace that it did afterwards, because the global financial crisis happened in 2008 and wreaked havoc and mayhem across the entire world economy, except the Philippines. The Philippines was unique in the sense that from 2007 going to 2008, the demand numbers grew by 90+%. And so from taking down 200,000 square meters, in 2007, the BPO sector led growth for take-up in the Philippine office market. And at that time, we hit close to 400,000 square meters of space in 2008 and in 2009. So if you look at how much space the industry took in 2008 and 2009, that's close to 750,000 square meters of space as the world melted through the global financial crisis. That makes the Philippine situation very unique. Fast forward to today, 2020, look at the way the demand has grown so significantly in the last 5 years. And the big question is, what will COVID do to offshoring and the BPO sector for the Philippines? Well, I think while there's been a pause, as we saw in 2008, there was a pause in 2008, but very soon towards the year end in 2008 and 2009, you see a massive kick in demand. And I think that same thing is going to happen to the Philippines in 2020. There's been a pause, quite a long pause now from February all the way to today. But I think by August, September, you're going to see a big spike in demand, because by that time, the CEOs of many global corporations would have figured out what they need to do to be able to survive the next 5 years, the next 3 years of their business. Part of that has to do with cost cutting and increasing productivity. And so part of that cost cutting will involve offshoring to the Philippines, which will then benefit us. Next. Which brings me to the POGO sector. And while there are many social undesirable traits that the POGO sector brings to the Philippines, the reality is that they have been a very important, meaningful part of the economy, where they not only take office space and rent at very significant scale and prices, they also do the same thing to the residential sector, where they occupy a significant portion of residential space. Our estimates would be about 2 million square meters of residential space being occupied. And then you have the tax that they are paying, whatever it is that they are paying today, has been a meaningful contribution to the Philippine economy. They are also the largest tourism market for the Philippines today, having just entered in 2016, 2017. And you can see that they are also a very large contributor to domestic consumption, and in particular, the foot traffic in the malls. Not just the foot traffic, but the actual purchasing power is significantly favoring the POGO sector. They also do a lot of entrepreneurial activities here, setting up businesses on their own, on the side, and employing a lot of people. Next. And if you look at the residential prices in the condo sector, this is how prices have behaved in the last 7-8 years. And if you look at the last 2-3 years, you see the big jump in rents because of the POGO sector, to the point where the POGO sector has pushed prices to about 1,800 pesos per square meter in the residential space. Next. And the highest concentration of POGOs is located in the Bay Area. And this shows you that had you invested in C residences of SMDC back in 2008, 2007, it would have only cost you 85,000 pesos per square meter at that time. And this blue line, this blue shows you the base capital. The orange shows you the capital appreciation. The green shows you the movement of rent, and the gray shows you the movement of yield. And you would have made a whole lot of money holding on to SMC residences and similar products as early as 2008, 2007. This shows you the 13 most visited countries in the world. And that involves countries like France, Spain, Italy, Hong Kong, Thailand, Germany, etc. You will see a number of colors here. So the dark blue shows you the native population of each of these countries. The light blue shows you the foreign residents and workers in each of these countries. And red shows you the foreign tourism that enters these countries. And the best example I like is Spain, because Spain has got 40 million native Spaniards and another 7 million residents. So another 7 million residents, to total 47 million. And yet look at their tourism arrivals, foreign tourist arrivals into Spain is clocking 84 million. So that's like more than 2 times the ratio of the native Spaniard versus the foreign tourists entering the market. So for every one local Spaniard, there are 2 foreign tourists. I'd like to bring your attention now to the very right of the screen where we show you the Philippines. Philippines in 100 million in blue, a very small proportion of foreign tourists, and at 8 million visitors last year, our historical high for the Philippines, we are already complaining that with 8 million foreigners and a modest amount of foreign workers in the Philippines, that we are being overrun by foreigners, and that is totally not the case. If you look at these numbers across different countries, it will show you that we are one of the least visited countries in the world by foreign tourists. And we have a long way to go to be rightfully feeling that we are being overcome by foreigners. We are so not being run over by foreigners. Which brings me to this slide. This slide shows you the power of China. The reality is that if we, the Philippines, want to develop our tourism market in a scalable way, in a rapid way, we need China. China is the single largest tourism market in the world. From 4 million tourists coming from China in year 2000 to today, 170 million tourists come from China. And for 60 years, China has ignored the Philippines until the last 3 years when they started to notice the Philippines and started doing business in the Philippines. Because of this administration's pivot to China, we now are benefiting in many ways from China, Chinese investors, and Chinese tourists. Now, China is the second largest economy in the world. It is the second biggest economy in the world. It is the largest home of middle-class people. It is the largest home of people with $2 million net worth. It is the second largest home of US billionaires and the largest home of entrepreneurs. And they have not done anything meaningfully in the Philippines up until our administration pivoted towards China. If we want to have economic prosperity and growth, we need China to participate in our economy. Because with China, other countries in Asia will follow. It won't just be about China. It will be about China and all the partners of China in the region that, by the way, is only 3 hours to 4 hours flight from Manila. And we have to ask ourselves, how much trade, interaction, economic activity do we do with our neighbors? Frankly, very, very little. Outside Japan, we do very little trade with Vietnam or Thailand or Indonesia or Malaysia or Taiwan or China. So you go through so many countries all over Asia within a 3 to 4 hour flight, and we do so little with these countries. And that has to change. And so this slide shows you the tourism numbers of each of these countries, and in red, it will show you the proportion of Chinese tourists in each of these countries. It will show you that we cannot develop a meaningful tourism market outside of China. We need China's participation in this market. Now, I'd like to walk you through one of the biggest plays that the Philippines will do, which is the REIT market. I'm happy to say that I'm very comforted and encouraged by the fact that Ayala Land has reaffirmed its decision to list their first REIT of the country November of this year. And that is very exciting. So this slide shows you how much of assets are actually REITed in the world. Well, there's only 1% of total assets that's REITed in the world. And so that gives you a whole lot of headway for REITable assets. Now, REITs, REITs can take any asset that generates recurring income. So assets like office space, retail, malls, hospitals, hotels, logistics and warehouse facilities, roads and tollways, prisons. Actually, other countries are doing prisons, airports, seaports, power plants, etc. Anything that can generate recurring income will be REITable. Next. And what many people fail to appreciate is that the Philippines is one of the largest office markets in the world. Today, we have close to 15 million square meters of office space alone. Of all this space that is existing today, 14 to 15 million square meters, most of this space is owned by very few companies. The top 10 developers own 45% of all the office spaces been created in Manila, in Philippines. And the next 20 developers own the other 10%. So if you can just imagine, there are only 20 companies that own 55% of all office space in the Philippines. And it's not just the current space that's available today, because in addition to the 14-15 million square meters of office space today, you have another 5 to 6 million square meters under construction in the next 6 years. So next slide will show you the mall space. The mall space is also equally very large at 15 million square meters of mall space available today, another 4 or 5 million square meters under construction in the next 5 years. And what is more surprising about the mall space is that there are only 5 players that own 80% of all these malls, with SM being the single biggest mall owner. Next. And so if you combine these two asset classes, office space and retail, you will end up with about 30 million square meters of total REITable assets. That's exciting because REITs always want scale. They don't want a REIT that is small, that is not scalable and not deep, because many funds abroad will only want to invest in REITs that have a lot of liquidity. And so I think this one, with 30 million square meters of REITable mall and office space, the one thing interesting about that is there are only 15 companies that own 2/3 of this space. So almost 75% of all malls and office space are owned by just 15 companies. Why is that relevant? Why is that important? Because it will make REITs very easy for Philippines, because there's only a handful of decision makers across a very large volume of assets. Which means that if somebody decides to do a REIT, they can do it very, very quickly, easily, and at scale. And this is what's going to give the REIT market in the Philippines longevity, sustainability, long-term prospects, very good long-term prospects. And I emphasize that because many of these landlords are some of the best world-class quality landlords. And if you look at the tenant profile, they're all very diverse tenants. And if you look at the geography of where these office and mall spaces are, the geography itself is also diverse. So it will give a lot of comfort to the foreign investors wanting to buy into REIT stocks that these are quality assets operated by quality landlords across a vast geography of the Philippines. So it's not just highly concentrated in one place in the Philippines. Next. In closing, I'd like to quote Jack Ma. One of the things, of the many things that he said, one of the things that he did say was, today is hard, tomorrow will be worse, but the day after tomorrow will be sunshine. It will be beautiful. And I think this quote of his is so apt today, because we really have to be brutally frank with ourselves that things are bad today. And in all likelihood, things will be worse sooner. But we cannot lose sight of the fundamental realities that give us hope, encouragement, and optimism in this market. So I'd like to summarize by saying that the Philippines is one of the best fiscally managed countries in the world that has allowed us to borrow money at record low prices, long-term money, and we have done that at the most important time to be able to fund this pump priming effort through this crisis. I think that the timing of that is so important. Number two, the BPO sector is going to continue to grow. In fact, bear in mind, remind ourselves that the office market in the Philippines is probably the only market in the world that has not contracted through COVID. Number three, the POGO sector is going to grow once the travel bans are done and that they have a reasonable compromise with the BIR to be able to open and make their businesses viable again. I think the POGO sector does more good to us than harm. And although the relationship with the POGO sector in the Philippines is not perfect, there are a lot of things that need tweaking and fixing. But overall, they have done more good to the Philippines than harm. We need China. China is the other powerhouse in the world outside US and Japan. We need them to invest meaningfully and over a sustainable period of time if we want the Philippine economy to grow and prosper and to lift our own people out of poverty. The REITs are very exciting for me, and we should all be excited because that will make the ownership of assets very efficient. Owning REIT stocks is the most efficient way to own real estate. And what I mean by that is that in order for you to buy real estate, hard real estate, you have to go through so much inspection, so many properties. There's a very long, tedious process about acquiring property. The tax is very high. And when you sell, it's so difficult to sell. It will take you weeks to months to sell any property, whether good times or bad. And the friction cost in owning real estate and selling real estate is very high. You have maintenance costs, you have taxes of all different kinds, you've got insurance to pay, you've got manpower because you have to man your properties. But to own a REIT stock gives you the benefit of owning real estate because ultimately you just own real estate for the yield that it gives you and for the capital appreciation, which you will get if you own REIT stocks. But it also gives you, it also spares you from all the inconveniences of owning real estate, such as the high cost and of holding and selling and the lack of liquidity and the time it takes to sell any assets. If you held on to REITs, the REITs will give you steady cash flow because it will dividend 90% of all its income, and it will do that on a regular basis, and that alone will produce price appreciation. And when you need to buy, when you need to sell, you can do it with a click of a button, because you either do it online or you do it through your broker, and you will be in and out of the REIT stock almost instantaneously. And so I'm very optimistic about the way the REITs will benefit the Philippine market. It will allow developers to finance more and grow faster and develop the countryside much better. And with that, thank you very much for your time and attention.
Hello again, David. We have a few questions for you based on the entire presentation that you've shared with us.
Sure.
So, David, is it time to downsize the business and the workforce? What's your perspective?
It might be too difficult to answer that, obviously, but I do have this. It reminds me of this quote that I held on in 2008 and 2009, and that is, when the ship goes through rough waters, the captain thinks of the ship. When it has been breached and crashes, the captain thinks of its people. So what that means is, at some point, ultimately, the business owners need to think about their people in times like this, when, in a way, the ship is compromised, the enterprise is compromised, the business is compromised, and therefore, when that happens, we have to, as much as possible, think about our people. Okay? You can shed everything else that is not necessary to operations, but we have to take care of our people. Because ultimately, in the recovery, the only thing that's going to help us recover is people.
Next question. How do you create an agile, future-proof business?
I just came out from a talk this morning that emphasized the use of technology, because technology will empower people and it will make things a lot more efficient. Now, depending on the industry, there are some technologies that are rapidly adapted to that industry, and there are some technologies in some industries where the technology hasn't really caught up in an efficient manner to the industry, to the point where, for example, in our business, the property consulting business, very hard to automate. And a lot of the work ends up that you're doing more work for the program or for the software, for the technology, than the technology is doing work for you. So, but in other industries, like for example, shopping, the online platforms for shopping has made shopping so easy and efficient, and very, very, very less time consuming, and that has empowered a lot of people. So that's what I mean by the technology adapting to these industries. And so we have to understand, what does it cost to do that investment? And many people have been postponing that need to invest in technology. But at some point, especially now during this crisis, we have to think about how technology can play a game and a role in improving our operations.
What part of the business would be best to invest in during this crisis?
Well, the first and most efficient place to make money is in the stock market. And if you look at the valuations of many of these companies all around the world, they are heavily discounted today. And so I think it'll be a good time to go into the stock market today. Number two, this crisis has proven that the office sector is some of the most resilient investments you can ever make. If you, for example, if you buy bonds, the companies that issued you those bonds could default on you, or you will not be able to sell, or the prices fall. If you buy into companies are also very hard up. So it's a hit or miss in doing private equity work. In the stock market, you'll have to bear the turbulence. But in the office sector, it's a very boring investment, but it is something that constantly is generating cash flow. In fact, in this crisis, the only asset class that has produced any cash for anybody is the office sector. So I reaffirm that we should move more money in the office sector.
Do you have any tips for CEOs and entrepreneurs like you as we face this situation that we're facing now?
Yes. I guess the biggest thing is do not lose sight of the good things that are happening around us. I was with Lito Camacho, the vice chairman of Credit Suisse globally, and he was kind enough to share that the Philippine economy is in the best shape ever. And the timing of this pandemic was so good in the sense that if this pandemic hit us 1 year ago, 10 years ago, 15 years ago, we would not be able to do the things that we are doing today to address the problems. We were not in a good shape in the last, we were only in a very good shape fiscally as a country in the last, let's say, 5 years, 6 years. And that's allowed us to get credit upgrades, that's allowed us to borrow meaningfully lower interest rates, and it's allowed us to get help from so many other countries. And the borrowing levels of the Philippines were one of the lowest in the world when this crisis hit. And so this crisis could have hit us 5 years ago and we would not be able to recover or address the problems that it brings as gracefully as we are doing now. There are many things that are not perfect. I concede that, but you cannot imagine how much worse it will be if we were not in good shape. So again, there are many things that are happening that are good despite all the bad news. Let us not drown in all this bad news and negativity. And as we go through difficulty, which I'm not denying, a lot of people are hurting. But we cannot lose sight of the good things that are happening, because that optimism is what's going to carry us through the next years, out of this crisis, through the next phase of our lives.
That actually ends our program. If you have any message for our audience right now.
Yes, I'd like to thank you for bearing with me in hearing the views of our business. And I thank Tony Lopez and Business Asia for having me in their show. Thank you very much, everyone.